So if this is the first time of you coming across my video, I am Quadrell, and I'll be posting some valuable trading content on this channel. So this being my first post on this YouTube channel, I'll be making a quick breakdown of my XAUSD trade I took. So I took this trade as my first trade of the week. Today is August 11, 2025. So I'll be walking you through the process of me getting this exact setup, and it's just hitting this nice target of a 1:9 risk to reward ratio. So let's get into it. First and foremost, for every of my trade, I make reference to top-down analysis in the sense that I'm approaching the market based on what is happening on the higher time frame first before moving down to the lower time frame. So how do we see this? First thing first, let's check the daily time frame to understand what the market is doing. So most of the time, I like approaching my trade setup based on the most recent price action. So I want to know where the market has gotten to and where the market is coming from and where the market is likely to go to next. So those three major parameters will be helping us to get a nice setup from this. So first thing first, as you can see, price got to this level on the daily time frame, which is a basic order block. If most of you trade smart money concepts, you should know what another block is. So let me just give you a tip. To choose a nice higher time frame order block, I prefer making use of the ones that actually mitigated a previous zone, meaning this order block is actually mitigating this zone right here. So, and also it is breaking some sort of structure. So we have it right here. So now this is my major focus. Now, after identifying where the price is at on the higher time frame, the next thing for me to pay attention to is if there are some sort of liquidity that was taken before that higher time frame level is being met. So as you can see, before price taps into this level, price created some sort of liquidity in form of engineered liquidity. So now, when price got into this point of interest, this bullish candle approached it, followed by another candle. But there is no sign of bearishness from this first candle. So for more detail, we have to go down to a bit lower time frame to see what the price is doing. So now, based on market structure, observe how price approached that level. We have a high, a low, a high, a low, higher high. So at this point, price took out this high. Price created another high right here as well. Now, like I said, we need some sort of liquidity to be taken, and also for a target, we need some sort of liquidity to be met. So now, what I'm looking for on the 15 minutes time frame is a sort of structural shift, also popularly known as change of character, or any name you call it. So basically, I want to see the internal structure shift when price approached that higher time frame point of interest. So we have this low creating this high, and eventually we have this internal structure shift. We have a first internal structure shift here, and also we have another internal structure shift here, making two. This is what I mean. If this is a point of interest, while price is approaching it, first internal structure shift, second internal structure shift. So after that is being confirmed, I could see this place as a protected high or a form of strong high to be expecting some sort of bearishness on this price action. So now, after identifying this, then I should try to know where price is likely to go next. Now, those liquidity, let's try to understand the type of liquidity that has been taken on that specific zone for you to know the kind of liquidity that will be targeted. So as you can see from here, this is more like the highest point priced. This is more like the highest point price reached for this particular day. This high is the highest point price reached for this particular day. So price is taking it out more like a previous day high liquidity. Let me just label it. Let me label it as PDH. So price is taking out this high as previous day high liquidity, and we have this high as a strong high. So having this break of structure, then we expect some sort of what? Some sort of pullback. But then, before we can expect some sort of pullback, liquidity has to be taken before our entry so as to be on a much more safer side, because liquidity taken before entry, I see it as inducement, in the sense that we need some early participants in this market to be taken out before we get in. It's very, very important. So now, for this, after this break of structure, you can see this pullback. We have it right here, but failed to mitigate this level. But that's not my concern for now. I need a structural point. So now, we having the trading range from this high straight down to this low, I am much more interested in trading from the premium part of this range, not a discounted part, because price can retrace into a discounted region, create a new low, and later come back to the premium region before a major sell happens. So now, if you are paying attention to this, we need to see the discount and premium region of this range. So meaning from here upward, that will be my my major area of concentration for this particular sell. Now, what is our business now? Our business is to know the kind of liquidity that should be taken before this entry. So now, let's identify the liquidity. So after this strong high, you can see price created some relatively equal high at this region. Let me just label it as equal highs. So basically from here, this is only obvious point of interest that we're having above this equal high. So how do we do that? I really don't have to start looking for specific zone above this equal high. Instead, I'll rather just, since the zone is very, very much close to that equal high, I had the sell right on this equal high, then protecting this. Now, in terms of our targets, our first target for this kind of setup, our first target is basically the external low of the range, because from this bearish range, price is referencing from this strong high to this weak low. So this being our first target, our second target should be any sort of internal structure between that same previous day high that was taken. So this previous day high that was taken, the internal structures available within that particular day, we have this low available, we have this low available, we also have this low available. So that should be our target. So in this case, my target was basically this low, because it's also confluencing with this relatively equal low right here. So let me just label it as equal lows. So that was the second target for that trade. And like I said, if a previous day high is taken, the targets for such would be previous day internal of that same day, So meaning I could target this, and as well, I could still target this, because it's still kind of an internal structure of that same previous day. So that was basically how the sell was